I'm going back to basics. So you asked, we answered. We're going to start with how the Canadian tax system works. Now, in Canada, there's three types of taxes mainly: income tax, property tax, and the GST, HST. Starting with the income tax, depending on how much money you make, it will be tiered up, meaning the more money you make, the higher rate of taxes you will pay federally, and then again provincially. So depending on your province, you will have the federal taxes that will be basic as the initial income tax, and then each province will have their own level of taxes. So what you want to do is make sure you understand how each of those taxes are paid. For example, regular income, interest income, or dividend income. Because on Canadian dividend income, you will get a tax credit, and that will help to reduce your taxes payable at tax time. Your GST, HST, a lot of that will be paid for goods and services in the province that you live in, so it can be slightly more or less. In Ontario, it is 13%. There are some goods and services that are exempt from this tax. And then, of course, we have property taxes. So if you own a property, and again, in particular in Ontario, where I live, government will dictate how much your property taxes are, and in each area that you live in. So if you live in Toronto versus Sudbury, your property taxes could be different. And I know from experience of living in both places, Sudbury taxes for property are very high because there's a lot less people paying, and they still have to give you the services. So understanding the Canadian tax laws will be really beneficial to you. So if there's a way to save, you can start. Watch the next video and I'll start showing you how. I'm Linda Levesque at Levesque Wealth Planning of IA Private Wealth. You asked, we answered.